Welcome back. We're still vibing over these 2025 tax code changes. We're now on Module 2, Section 1, where we're talking about tips being deductible on the 2025 tax returns. This section is a little bit more detailed about what the no tax on tips under Section 224, what it means from the IRS code position that we reference from the IRS Notification Center. And this one is referencing notification 2025-69. And this will be our reference point. Section 225, paragraph A, provides a deduction in an amount equal to the qualified tips received by an individual in a taxable year that are included on a statement such as a W-2 or 1099 form, or other forms such as a Form 4137 that reports tips. It also has limits to the amount that you will be able to use this particular deduction of $25,000 for taxpayer in that year. It shall not exceed that amount. Further, your phase out is what we call it, where the deduction diminishes over the amount of income that you make. The phase out will be for merit filing jointly $300,000, and for all others $150,000 would be the phase out. Now, Section 225 provides that in case of qualified tips received by an individual during a taxable year in the course of a trade or business, meaning that you need to have got the tip related to the business that you are working with. So you can't claim a tip for something else that's not really what your qualified trade is that you are receiving a tip for. Now, if at any point that the amount of the deductions, okay, 5,000 is you exceed that amount, then anything above that amount in qualified tips will be considered taxable income. So let's talk about what is a qualified tip. So Section 224, paragraph D1, defines qualified tips as cash tips received by an individual in an occupation that customarily and regularly receive tips on or before December 31st, 2024, as provided by the Secretary, Section 224, paragraph D, sub 2. Further requires that qualified tips not include any amounts that were not received in the following manner: is paid voluntarily without any consideration in the event of non-payment, and is not a negotiated position. It is primarily determined by the payer. It is not received in course of a trade or a business and labeled as something else. It is basically given as gratuity by the payer. Now, the further provides that an individual receiving tips on a trade or business performing that business, receiving that tip implies that they are an employee or type affiliation with whatever that receipt is done, tip is for. Now, regarding the states, it is still a very fresh law. So most states have not had a chance to review or respond. But many states are aligned with the federal and other states are not, and meaning that certain states basically use the federal return as their base, and then they make different changes regarding their particular state legislation laws. So at this point in time, we only see that the state of Michigan is still aligned with the federal, which means that they would honor the no tax on tips position that is given by the federal. Other states have specifically said that they will not be able to do that, and they will either be adding it back in or it will not be considered a deduction. And those states so far are California, New York, Illinois, Pennsylvania, Colorado, Maine, and Rhode Island. And then the other states may or may not be aligned with the federal. We have no idea what their position will be on this. It will definitely depend upon their state legislation to decide whether or not they will be honoring the no tax on tips position for the 2025 through 2028 period as outlined by the federal change in code.